Thank you, Dr. Hong, for the kind introduction. Also, I'd like to express my gratitude to the Bell for organizing this important IL event. Taking this precious opportunity, I'd like to update you on how the Korean economy is doing to ultimately secure a win over the pandemic. In this presentation, I have three segments of stories which respectively cover the Korean economy's performance so far, current developments, and policy initiatives for the future. First, our successful defense against the pandemic. Korea has made outstanding performance in both containing COVID-19 and minimizing its negative impact on the economy. To begin with, Korea's cumulative number of confirmed cases and deaths is among the lowest in the world. Such achievement was made possible through Korea's effective quarantine system. From testing to treating, we built up an efficient process utilizing our strong IT capability and employing innovative measures. Holding on transparency also helped encourage the voluntary participation of the people, which enabled Korea to successfully contain the virus without a nationwide lockdown. On the economic front, we exerted all-out policy efforts, producing greater outcome with lower cost. In terms of input, Korea's policy response was highly cost-efficient compared to that of others. In fact, our total input relative to GDP at 16.5% was far less than other advanced economies. Our support was even more efficient as we relied more on financial measures than fiscal ones. Nevertheless, our fiscal policy played a leading role in the fight against COVID-19 as represented by the 6 supplementary budgets during the pandemic. Thanks to these efforts, Korea suffered the smallest setback in growth, which implies the scarring effect of the pandemic would be relatively limited going forward as well. As a result, the Korean economy fared better than its peers so far. Among the advanced economies in G20, Korea was the first country to recover to the pre-pandemic GDP level in the first quarter of this year. Also, in terms of growth estimates through 2020 and 2021, Korea marks the highest in the same group. Export was the key driver behind such a strong recovery, with the volume recording all-time high. And the Korean economy rejoined the world's top 10 last year, rising up 2 ranks from the previous year. Korea is also enjoying strong investor confidence in the global financial markets. Our sovereign credit rating stands at all-time high, maintaining AA grade, while as many as 113 countries suffered downgrades during the pandemic. Such strong credit has also been demonstrated by Korea's CDS premium, which reached 17 basis points last September, the lowest since the global financial crisis. The CDS figures also show that Korea's external vulnerability has decreased significantly since the 2008 crisis, as the volatility in times of crisis dwindled by 1/20. Korea's successful recovery is attributable to its strong economic resilience. Now, we'll see what's behind the strength. First, Korea has a robust fiscal position, which enabled a significant amount of stimulus packages without causing stability concerns. Despite the expansionary support, Korea's fiscal health remains in good shape, as both the government debt to GDP ratio and the fiscal deficit stand at a much lower level than those of other advanced economies. Korea maintains strong external sector soundness, which provides a buffer to external shocks. Our current account balance is recording a surplus for 23 years in a row, with annual surplus amounting to around 4% of GDP. The external soundness is further underpinned by the financial account strength, including world's 8th largest FX reserves and a sizable net international investment position. Korea also has a very well-balanced industrial portfolio, which is rarely observed globally. Korean manufacturers have world-class competitiveness in major industries, and their export structure is also well diversified as well. Lastly, Korea has strong innovation capacity together with a business-friendly environment, which is well recognized by world's leading surveys by Bloomberg and the World Bank. In terms of actual performance as well, we are witnessing substantial progress these days in venture capital investment and the success cases. Tech companies have recently been rising into top ranks in stock capitalization, and there has also been a milestone IPO of a Korean e-commerce company in the US stock market. Now, let's move on to the next story to see how we are progressing towards a full-fledged recovery. After successfully defending against COVID-19, Korea is on the path of fast and strong recovery, and well-balanced growth across sectors is driving the rebound. Our exports has been record-breaking, and we expect to achieve the highest annual exports this year. Domestic demand is also on a recovery track. Private consumption bounced back swiftly in the first half of this year until it recently slowed due to the new wave of infection. Equipment investment is at near all-time high. Supported by such recovery momentum, GDP growth rates have recorded a robust 1.7% and 0.8% in the first 2 quarters of this year, respectively. Although the pace has slowed a bit in the third quarter, affected by the Delta variant and the disruption in global supply chain, the Korean government will leave no stone unturned to achieve its annual growth target of above 4% this year. Let's take a closer look at each sector now. First, our exports are increasing across the board. Our major export items are on an even rise, and the export has risen with all our major trading partners. Thanks to the export boom, we have achieved a cumulative trade volume of $1 trillion last October, which is historically the fastest pace ever. Korea also jumped up to the 8th place in global trade ranking, moving 1 notch higher from last year. Regarding private consumption, one notable fact is that it is getting more resilient against COVID-19. For example, the impact of infection waves on credit card consumption in restaurants has become milder during the recent spread of the virus. Consumer confidence index is also rising, helped by rapid progress in vaccination. If you look into investment, semiconductor sector is leading the recovery, and the total volume of equipment investment has reached the historical high in the second quarter of this year. We are also seeing acceleration in employment recovery. Compared to other major economies, Korea's employment suffered a smaller impact of COVID-19, and its recovery has been faster so far. The recovery momentum is very strong in recent months, with the number of jobs increasing by more than 600,000 from a year ago, and the total number almost fully recovering to its pre-pandemic level. The quality of jobs is also improving as the number of full-time workers is on a rapid increase. Thanks to the all-round recovery, our growth momentum in the near term is quite solid. The IMF maintained the growth forecast of Korea this year in its recent World Economic Outlook, although it lowered its forecast for the global economy and most of other advanced economies. Other international institutions, including credit rating agencies, are also making unwavering positive evaluations on the Korean economy. We observe unflagging demand for Korea in the capital markets as well. The surge in Buy Korea is represented by the record high local bond holdings by foreign investors. Foreign direct investment in Korea is also picking up at a fast pace this year, as expected, and expected to rewrite its annual all-time high. We could also witness the so-called Korea fever during the recent offer of our government's euro and US dollar denominated bonds, which produced the tightest spread ever for the same kind. On the way towards a full-fledged recovery, we might face a bumpy road due to uncertainties and challenges in both the global and the domestic economy. Uncertainties continue to weigh on the global economy, which made the IMF lower its global growth forecast recently. And as you may well know, the risks include a resurgence of a COVID-19 variant, financial market disruptions during the course of a monetary policy normalization, global supply bottlenecks, and emerging market debt issues. In the domestic side, the vulnerabilities still remain in sectors hardest hit by COVID-19. Face-to-face services, small businesses, and self-employed are still suffering from the pandemic. Also, increasing financial imbalances, notably the build-up in household debt and the rising house prices, can potentially pose risks to our economy. In the face of such uncertainties and risks, our government is doubling up its efforts to ensure a full-fledged recovery in the near term. The first step is a gradual return to normal life. In Korea, although vaccination started relatively late, we have made a rapid progress and achieved a higher inoculation rate than planned. According to the Living with COVID-19 plan, which is effective from this month, social distancing measures like restrictions on business hours of restaurants and private gathering are being gradually phased out. Turning to economic policies, we plan to implement accommodative macroeconomic policy until the recovery gets firmly on track. Fiscal expansion will be maintained in the near term, with next year's budget increasing 8.3%. At the same time, we are committed to stepping up fiscal consolidation efforts in the medium term. Government expenditure will be normalized gradually until its growth rate reaches equilibrium with revenue growth in 2025. Also, to ensure fiscal sustainability, we are seeking the legislation of a new fiscal rule which limits the fiscal deficit and government debt at specific levels. On the monetary front, although the Bank of Korea started raising its target rate, its policy stance is expected to remain accommodative in the near term. We are trying to concentrate our policy resources on targeted sectors most affected by the pandemic. This is to make sure that our support serves to relieve the hardships of the vulnerable and the impact of the stimulus is maximized. To boost consumption, we have implemented 5 rounds of COVID-19 income relief payments since last year. To spur business activities, we are extending tax and financial support for the key industries. To vitalize employment, we provide subsidies to employers who retain employees while creating jobs in the public sector through fiscal support. Lastly, we are paying particular attention to managing potential risks associated with the household debt and the housing prices. In Korea, household debt is at a relatively high level compared to other countries and increasing at a rapid pace recently. Thus, our government is trying to slow down its growth through measures like the DSR regulations. With regard to the housing market, rising prices continue to weigh on the people, although the rate of increase is relatively low in international comparison and showing signs of slowing down recently. To stabilize the housing market, we are focusing on expanding house supply and curbing speculative transactions. Now let's take a look at our medium to long-term strategy to advance beyond the pandemic. In the post-pandemic era, we are expected to undergo fundamental changes in our societies and economies, which calls for our proactive response. On top of that, Korea also needs to deal with its persistent structural challenges, which include weakening growth potential, demographic changes, and inequality. In response to these challenges, the Korean government is pushing ahead 5 key initiatives with an aim to realize a grand economic transformation in which Korea evolves from a fast follower to a first mover with a much higher level of innovation and inclusion. Last year, our government rolled out the Korean New Deal, which is a strategic development framework for innovation and inclusion. The plan comprises the 3 pillars, which respectively aims to promote digitalization, foster green growth, and enhance inclusiveness. The financial inputs under this initiative will amount to $185 billion by 2025, roughly 11% of the current GDP. Now, more details about the 3 pillars. Under the Digital New Deal, we will promote newly emerging digital industries and the digitalization of non-face-to-face services. The Green New Deal will enable us to build green infrastructures and develop renewable energies. Through the Human New Deal, we will focus on investment in human resources and their relocation into new and promising industries. If successfully implemented, the K-New Deal is expected to play a pivotal role in restoring our pre-pandemic growth trajectory. Also, we are expecting that 2.5 million new jobs will be created under this initiative. Addressing climate change is another important step towards a sustainable growth. Last year, we announced our commitment to achieve a net zero carbon emission by 2050, and to support the commitment, we prepared the carbon neutrality strategy last December. To implement our strategic plan, we will employ comprehensive measures ranging from fiscal and financial support to institutional reforms. Representing Korea's ambition to become a leader in responding to climate change, our government has recently revised up its 2020 NDC target drastically from 26% to 40%. To comply with this commitment, Korea will step up its efforts for greenhouse gas reduction at a fast pace. Our third initiative is to foster new growth engines. Korea's productivity growth has slowed down as its major industries become mature, and accordingly, the growth potential of the economy has been weakening as well. To slow and reverse this trend, Korea needs to nurture new industries that have the potential of filling up such a productivity gap. Thus, our government has been developing key future industries, namely the DNA and Big Three. Boosting service sector innovation is also one of our key tasks. Demographic change has become one of the biggest risks. Korea's population turned to a decreasing trend last year, and the pace of aging is getting faster, mainly due to the steep drop in fertility rate. In tackling the risks, the Korean government has adopted a two-track approach, raising birth rate while enhancing adaptability to aging society. The key measures in this respect include strengthening support to childbirth and child care services, and promoting labor market participation by women and seniors. Last but not least, for sustainable growth, Korea is reinforcing social safety nets to address inequality. During the pandemic, Korea has been praised by international media and investors for its remarkable resilience. Indeed, Korea has risen up from every crisis it faced so far and came out even stronger. Going forward as well, we are confident that the Korean economy's success story will be continued in the future, and hope you would join the journey. Thank you.